Apex Trader Funding remains one of the top industry prop firms in the futures space, and this year it's allowed me to pull out 5 figures every single month consistently. And if you understand the rules and if you understand the power of scaling with Apex, then you can do exactly that. So in this video right here, I'm going to teach you how to pull out tens of thousands of dollars from the market using Apex Trader Funding, just like I am every month. I'm going to show you how to pass the evaluations, the rules that you need to be aware of, and how to get to payout. So this is my complete guide to Apex Trader Funding. I'm going to show you why I think you should start trading with Apex today if you're not already, which account size that I think might be best for you as a trader. I'm going to show you all the rules you need to know about the evaluation and how to pass it, and I'm going to show you all the rules for the PA accounts and how to get past the buffer and start getting paid. So why should you start trading with Apex? Well, the first thing is they've been around. This is not a new firm. They've been around since 2021. They've got tons of experience in the industry, and they've got proof of concept, which means they've paid out. And not only have they paid out, they have paid out their traders more than anyone else in the whole prop firm industry. Compensation now, $535 million paid out to traders and growing, with over $60 million paid out in the last 90 days alone. And some of those dollars, about 10,000 plus each month, has been going into my pocket, which is why I'm doing this video for you right now. So some of the benefits to trading with Apex then. Well, you're going to receive 100% of the first $25,000 on each account that you have, and after that you go to a 90-10 split. You will get payouts, assuming that you hit all the criteria, every 8 days. So you can get paid out at least twice every month as long as you hit the criteria. You can trade full-size contracts in the evaluation, and you can build up to it very, very fast in the PA accounts as well. There is no daily drawdown. You can trade holidays, you can trade news events, and the big one for me is there's no cap on the total payout, something that we're going to get into later. But if you make it to the 6th payout, you can pull all your profits out in one go, or if you want to, you can convert to a live account with Apex, trading as a live funded trader for their prop firm. Above that, you get tons of free content with them, whether it be educational or subscriptions to things like NinjaTrader, level 1 data free. But the big one for me is that you can trade 20 accounts. You can trade up to 20 accounts with Apex, which means your ability to scale is endless. It's how I'm able to pull out so much money each month without risking very much at all. It means my cost basis to get into the market is very low, and my ROI on return is absolutely insane right now. And I want you to be able to do the same, and this is exactly how you're going to do it. So when you come over to the website, you're going to be given a ton of choices, ranging from a $25,000 account all the way up to a $300,000 account. And ultimately, it is up to you what you would like to use. And that's really going to come down to the size that you like to trade with versus the trailing drawdown. And also, you've got to bear into mind the difference between that potential profit that you need to make and the trailing drawdown, because as you go up in size, it starts to get harder. But the 3 that I like the most are on your screen right now: 50K, 100K, 150K. But 50K is my personal choice. It's the one that I think is the easiest to pass. It's easiest to get past the buffer in the PAs, something we'll go over later, which means it's easier for you to get paid. Like I said, 50K account, the best one to use. And let's look at what comes with that 50K account. Now, the first thing is the contracts. You can trade up to 10 minis or 100 micros with the 50K account, unlike some of the competitors who won't enable you to do it. So it's already a massive positive for Apex. The next is the RR, and it's the RR between the profit and the trailing drawdown. It's not too far off a 1-to-1. Now, the only 1-to-1 account that Apex offer is a 25K account. That will mean that you are able to lose and make exactly the same amount. But in a 50K, it's not too far off. It will allow you to have $2,500 of trailing drawdown, and you only need to make $3,000. Now, as you scale up into the bigger accounts, for example, the $150,000 account, you will only be able to risk $5,000 on your trailing drawdown, and you will need to make $9,000. So almost a 2R. So you can see this is much easier to pass with a 50K account. Very, very beginner friendly, but also very, very scalable, even for those advanced traders. Another key thing here with the drawdown is it's $2,500 on the 50K account. And if you look at the competitors right now in the industry, they're only offering $2,000, and it makes a difference. So again, major positive for Apex. Other key parts here, there is no daily drawdown, there is no scaling, there is no consistency rule in the evaluations, and it works on all the major platforms. So it will work with TradingView, with Trader8, on a browser, on a mobile, on Ninja, and the license comes for free. And also real-time data comes for free. And it is cheap. Now, I know at the bottom here it says $187 a month, but in reality, using my code FZT, you are always going to get a sale price, and most of the time it is around 80%, sometimes up to 90% like we've had recently, which means you can pick these up ranging most of the time between $16 and $35, which means it is so cheap. Your barrier to entry to get in this industry right now is incredible. It wasn't like this years ago. You've really got a great opportunity right now to scale and grow with a low barrier to entry to get involved in the future space. So now you understand why you should be trading with Apex, what the possibilities are with Apex. You've really got to understand how to pass the evaluation. So why do most traders fail to pass the evaluation? Because it's really not that hard. Well, I'll tell you why. Number one, they oversize. They sling 10 minis on a trade, hoping to reach their TP straight away. They go into 15 points of drawdown on NQ, which is absolutely nothing. That's normally about half an ATR of a 1 minute candle, and they blow up. And that's why. And why do they do that? Well, a lot of the time right now, it's a 1 day pass. So they're in a rush. They're in a rush to pass it, not even in 1 day, but in one trade. Don't be that person, okay? You don't need to do that. You don't need to oversize. You don't need to be in a rush. Trading is not about rushing into the market. Another reason they fail is they don't understand the trailing drawdown, something we're going to go over very shortly, and they don't use a trailing stop. My advice when you're trading with Apex is to use some form of trailing stop, whether that's on an automated system or whether you are dragging the stop up, protecting your profits. Again, we're going to go over it shortly. The fourth reason that they fail is they don't take profits at TP areas, at areas of interest, at liquidity pools. And what does that mean? They're not taking profits at the highs. They're letting it pull back into their trail and eating into potential profits. Again, I'm going to go over all of this very shortly. And the fifth reason traders fail, and this is why they fail many accounts, is they trade in bad areas. All right, they get chopped up in bad areas rather than trading good areas in the market where momentum is likely to come in and push in a direction in your favor. If you are trading in a bad area when you have a trailing drawdown, let's say we're pinned in a range and you're not playing the edge of the range, you're going to get chopped up both sides of it. You're going to blow up very quick. So how do you pass these? Well, you size according to the ATR on the chart and the drawdown that you have available in your account. You take your time because you do not need to pass in 1 day. You do not need to rush these markets. You use a trailing stop, you set take profits at key levels, and you respect supply and demand or support and resistance, and definitely news. When you get that increased volatility, you better be aware of when it's coming in. So let's look at the two types of traders then that are out there in the market, and maybe one of these is you, and maybe at times both of these is you. And you need to understand the difference between an aggressive trader and a steady trader. All right, so an aggressive trader will use more size, not necessarily oversizing, but will use more size in their positions. And that means that they're able to pass these accounts fast. But it also means if they get it wrong, they're going to blow up more and more often because they're going to eat into their trailing drawdown. A steady trader, they're probably not going to pass these accounts fast. It might take them a multiple of days to get these passed, but they're unlikely to blow up as often as that trader who is being aggressive with size. So aggressive traders will state that they have a good RR, and it's still better than paying for a straight to funded account for the price. They're willing to blow up, especially if there's a big sale, a few times because it's so cheap. And with that, once they're passed, it's still cheaper than going straight to funded with some other added benefits. But a good risk reward will get a steady trader to that same goal for less money because they're less likely to blow up. And it might only take you a few trades more, a few days more. So think about that when you're approaching the markets. Which type of trader are you? Are you that aggressive trader who's going too big and oversizing? Do you need to start trimming your size, acting accordingly, and trading what's in front of you rather than trying to pass the account? The key always to markets, whether you're in an evaluation stage, PA stage, or trading a live account, is to trade the market in front of you and respect those market conditions. So coming into this New York Open, I just give you an example of how I would trade these. Now, first of all, we're going to look at the aggressive trading example. Now, the setup remains the same. I'm looking at the previous day value area low. I've got clear areas of liquidity that I want to aim for above, some potential swing highs where possibly some shorts intraday have left their stops overnight. Okay, so we're looking to see if we reclaim these key levels and if we start to get a shift of structure to the upside, and then how we trade it is what's going to be different. Nothing else is going to be different. So here is the shove under value area low. There's the reclaim. We're looking for a dip back down now to hold this structure. All right, this structure here is what we're interested in. Any dip in 1, 2, 3. All right, I'm putting 3 contracts on straight away, and my ultimate TP is going to be all the way up here, which would effectively, if this was a 50k account, for example, would be passing it in one go, one trade. So we start to move, and straight away you can see we're up $615. Now this is where it gets scary straight away if you're on a 50k account, because if this now starts pulling back, I'm already in significant amounts of drawdowns. What I'm looking for is to take a TP off when we start getting up there. So there's one, we lock one in. Now we're down to 2 contracts. We're going to see if we can ride all the way up at this point. Again, don't want this to come and knock us out, but at least we've got one off at this point. We're actually going to put our stop loss in just under here, just in case it does want to knock us out, and we can always re-enter. There we go, starting to base now. So we want to see this base and start to get aggressively push higher. There's a new swing point after sweeping. So I'm going to move this to break even at this point, and if we get an expansion higher, we can start to trail. Starting to see that base again, starting to trail now because we're already $1,200 up. We can't give too much away, so we're going to go beneath this swing. Next expansion, we go beneath the next swing, and we get knocked out. There we go. This is the thing with using more size and being aggressive. It's harder to hold on for the full move because you know you're going to have to lock in. Now, if I flip that now and change it from being an aggressive trader to having less size, you're going to see the difference. So remember, we're looking for exactly the same setup. Nothing's going to change, but this time with a steady trader, we're going to trade with less size. So we're looking for the same thing. We're looking for dips underneath value area low to hold, previous day value area low, expansion higher for a change of character, a pullback inside. There's our pullback inside, and we're buying one singular contract. And this time we've got a nice type stop, risking the potential RBS, and we're looking to take profit at the highs, which will give us $1,000 profit, and we can let this play out now. Now I'm not stressed about every little micro move up and down because we're positioned and sized accordingly to our 50k account. I'm not worried about it knocking me out for a little bit of money. We can just let it base, and we'll move the stop up when it makes sense to move the stop up, which is now. Now we can see there's an internal sweep. So now if I want to move underneath these lows, I can, no problem there. And we can start to get aggressive with the stop when it makes sense to, not having to be overly protective because of our size. Now I might move my stop up into the money here. So I'm going to make sure I lock in $140. We're currently up $575. Let this play out. There's another internal sweep there. Starting to base, we can move this up like a tad bit more, hoping that this starts to expand higher at this point. And there we go, TP hit. Never once in stress, constantly in the money, because we're sized appropriately for our trailing drawdown on a 50k. And all you have to do is that exact trade there 3 times. That's it, and you've made your money, you've passed the account. What you don't need to do is oversize like on the first one using 3 contracts and not locking in the money and actually eating into your drawdown because you get knocked out at the low point of a swing rather than being able to ride it up to a full TP area. So we've gone through the evaluations and I've shown you the two different ways that you can trade, but how I would always advise trading no matter which type of trader you are, whether you're the slightly more aggressive or the steady type, it's important to understand that you must use a trailing stop to protect you, and you must take profits at the highs at all points. And it's not at the high of day or the total high. It's at the highest point within your trade. The time that you're active in the trade, you must be locking in those profits. Once you've passed, you will enter into the PA stage. Now here you will need to pay an activation fee, and that fee ranges between $90 and $150 depending on the sale. Again, you can use code FZT, always get you the best possible price. And once you've paid, you also need to sign your contract with Apex, all the usual legal stuff you will find with all these prop firms. The rules though, once you get into the PA account, are different to the evaluation account, and it's really important that you understand the difference because you need to trade differently at this point, especially if you are that aggressive trader. So what are the rules to get paid? Well, the first one is you need to trade for a minimum of 8 days, right? 8 trading days. Now, not all those days need to be profitable. Just 5 of those days need to be of $50 or more. The other days, maybe they're not winning days. Maybe some of them are bigger winning days. It doesn't matter, but you must have 8 trading days and 5 of them must be of at least $50 to be applying for a potential payout. The second rule is the 30% consistency rule of your profit. Now, what does that mean? It's so simple. So many traders get confused here. It simply means your biggest winning day in that 8-day period cannot be worth more than 30% of your total profits. And the easiest way to figure this out is to take your total profit in that account and times it by 0.3. Let's say I'm trading a 50K account and I've made $4,500 and I've traded at least the 8 trading days and 5 of those are over $50. Okay, so $4,500 times by 0.3 will give me $1,350, which means my biggest profit before going for this payout on one singular day cannot be more than $1,350. That's the 30% consistency rule for profit explained in a nutshell. It's really easy, just be consistent. The next 30% consistency rule is about your losses or drawdown per trade. Now, this is one that can catch traders out when they don't understand it. But again, super simple. We're going to take that exact same scenario. Let's say you're starting the day at $4,500 in profit. All right, very simple. When you're trading that day, one singular trade cannot go into more than $1,350 of drawdown. All right, really simple. It just means you can't go into big drawdown. Now, if you go into that drawdown, it's okay. It just means that you are likely to get flagged. You probably will not be able to get your payout in that first window, that first 8 days, but trade 8 more days. Everything will be fine. You keep going. The next rule is a new rule with Apex, and it's the scaling plan. All it means is whatever account size you're trading, you can only use half the total amount of contracts until you are past your buffer. So for a 50K account, you have 10 mini contracts available. You can only trade a maximum of 5 minis per account until you meet that criteria of $2,500. Then if you wish, you can trade 10 minis. Would I advise on that? No. Would I even advise on 5 minis? No, you don't need to be trading 5 minis, all right? 1 mini is more than enough for a 50K. In fact, the way I like to trade it and the way I teach my student is to use the power of micros and to hold your runners. It's the best way to trade these accounts. The 5th key rule is the negative risk reward rule. Now, again, it's really simple. Let's say you are trying to make $100 for a trade. So in this case, it would mean that you would put 1 contract on. You would be willing to risk 25 points on the NQ to make just 5 points, right? That would still be acceptable in Apex's mind, but you know, most of you should be trading 1-to-1, 2-to-1 positive most of the time. Definitely not negative 5R. to 1. That is not going to be a sustainable way for you to trade and make money long term, but they're generous with you to give you the chance to learn as you go. Again, major positive for Apex here. Very, very generous. And the last rule you really need to be aware of when you're trading the PAs is the consistency rule. Now, this one they are flexible with. The main thing is they want you to be as consistent as possible with sizing. That said, if you are trading 1 mini most days, 1 mini, 1 mini, 1 mini, and then suddenly on a day where there's FOMC, you decide you're going to scale down and trade less because the ATR and volatility is going to be more, that's absolutely fine. They have no problem with that. Again, if you're scaling 1 mini, 1 mini, 1 mini, and you're starting to trade well and you move up to 2 minis, no problem. There is no problem with that at all. What they don't want is for you to trade 10 minis on one trade on the first day, make a ton of profit, and then scale back and trade 5 micros, 5 micros, 5 micros, 10 minis, 5 micros. They're not looking for that. That is gamifying. That is someone that's not trading. That is someone that's hoping to get lucky and stay in the system long enough to become profitable. That's not what they're looking for. They are looking for you to trade setups, legitimate setups consistently, like all prop firms and like you should be doing anyway, right? You shouldn't be trying to gamify this. If you're the one slinging 10 contracts, you're going to blow up more times than not. So there you have it. Those are all the big positives in Apex. That's how you can pass evals, scale up to 20 accounts, how you build through the PAs, how you get to the buffer in the PAs, and how you can get to payout. But sometimes things go wrong. You've seen it with me on stream where my trade copier acts up and I'm in positions in some accounts and not others, and I start to get into max loss for the day and I have to walk away. And that's fine. And the key thing there is this. I did not blow up my Apex accounts, but I did break some rules on the PAs on that day. But does that mean I lose those accounts? No, it made absolutely no difference. All it meant is that in that payout cycle I was in, when I put in a request, I knew I was going to get denied because I'd broken a rule. It wasn't their fault, it was my fault. Or in this case, it was my system's fault, my trade copy's fault. But whatever it is, that responsibility lies on me. But I don't lose the accounts. All it meant is I traded another 8 days in the cycle and I go for payout again and I get paid again and I'm back in routine and rhythm. And it's one of the great things about Apex. They're not punishing you for breaking a rule. When you don't get paid, it's because a rule's been broken. All you've got to do is stick to the rules and you're gonna get paid just like this. So I hope that's cleared some things up for you, and hopefully you put Apex on your list of the best prop firms that you should be trading with this year. And don't forget, all the links are down below. Use code FZT to get the best price with Apex always, and hit that subscribe button. I'll see you on live stream real soon.